The market is freezing up and everybody is watching tomorrow's Bank of Canada announcement regarding whether they're going to hike the interest rates or not. Now, the latest numbers for June are out, and historically speaking, it looks super normal, right? Especially the price decline. But if you look a little bit deeper, you can see that it really started to deaccelerate really fast after the June rate announcement. And the inventory is building, which means there could be some price discovery coming up. Now, stay tuned to find out what is actually happening in the Toronto real estate market. Now, if you are looking for some help on how to navigate this volatile real estate market called Toronto, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto Area, on top of making awesome educational real estate content just like this one for you. And if you found any of these videos that I'm putting out there on YouTube helpful in your real estate journey, whether it's buying your first home, buying your first investment, multiple investments after, selling your first home, or honestly just like general curiosity about the real estate market, because that is like the third most talked about topic at the dinner table, then yeah, do me a solid by smashing the like button and subscribing to the Prime Properties channel, so that helps get the knowledge out there. And by subscribing to the Prime channel, you'll know that I put out more content and there'll be some bonuses coming up. Now, the latest numbers are out and there's a lot to talk about, like tons, right? But let's just go over the month-over-month summary, which I have right here. As with most things, using month to month because it's a little bit volatile right now, and you can see prices are down from last month about 1.2%. That's normal. Sales are down rather big amount. More on that later. That is not normal. The new listings are up about 33%, which is also not normal, which leads us to the month of inventory being up 43%, which is 100% not normal. And all of this is happening while the actual months of inventory is sitting at still 1.88, which means it's still a very strong seller's market right now. But if we continue to get inventory and sales continue to slow down at this rate that we saw in the last 2 weeks, because of the outsized sentiment effect from the rate hike that we saw in June, we'll probably see the months of inventory in the twos very soon. And yes, it's still a seller's market, but it won't feel like one on the ground when we're transacting, unless you have that like picturesque, perfect, ready to move in property near the highway that's been renovated, right? Or like the subway. Now, last month, every price change on the chart was green for prices, right? And now you can see every single one is red except for one. But that one is like close enough to zero, so whatever, all red. So prices are normally supposed to come down between the month of May and June in like most markets and like most years. But the story here isn't that prices are only down 1.2% in total or so, but that properties aren't selling going into the summer market. And if there isn't enough demand relative to the supply that we're seeing come online right now, we could see some price discovery downwards that's outside of the normal like seasonal changes, right? And it's not good for, I guess, anyone who thought it was a bull case. Now, here's a look back at all the monthly change, and you can see that we're basically in the red again in the month-to-month change, and we had like 4 months or 5 months of prices going up, right? But we are still above June 2022 prices, meaning we're actually up year over year. And I've said this many times before. Because of the slowdown in 2022 and then the re-ramp back up in early spring of 2023, the year-over-year numbers for the next few months are going to look rosy. But I did say that in May 2023, last month, it would probably be the peak pricing for 2023, like this year, and it's looking to be true. Now, let me show you the troubling charts that back up what I'm seeing on the ground since the rate hike the rate hike that happened in June, not the one that's coming tomorrow, right? Or potentially tomorrow. So showings essentially grinded down to a halt. They're down almost 50%. That's a big sentiment change. While it should slow down in June, it shouldn't slow down 50%, right? Now, mind you, the Bank of Canada rate hike means that variable went up, but so did the fix. Because in early June, you could get a fixed rate, around like 4.8% or so. Now we're up a full 1% or 100 bips to like 5.8, if not higher. Now here's a chart showing you the offer volume as well, and you can see similar trends, right? Here's another troubling chart for you. This is the active listings in the market. The white dotted line is 2023 this year, and you can see the only other 2 years that active listing numbers, which is basically the number of available properties for sale or for you to buy at the end of the month, increased from the month of May to June, is the year 2020, which was the pandemic, and 2022, last year, which was the massive rate hiking cycle, and we went high gear, 1% rate hike, right? So what I will note here is that the second half of the pandemic is when the rates came crashing down, and then real estate went bonkers and went on an absolute tear. Now, 2022 is when we were in multi-decade low. And this is the only reason why the active listings didn't grow some more in last year, was because the banks essentially backstopped the entire real estate market, allowing for negative amortization. If you guys kind of remember that, we're talking about the trigger rates and everything at that time. So it will be rather interesting where we end up this year, because it's kind of like a combination of the two. Now, here's a chart showing the months of inventory in a very similar fashion to give you an idea of the last few years and the trend. Do you see the problem here? If you look closely, the months of inventory is trending up really, really fast right now, hence the 43% increase, like I said earlier in this video. Its acceleration looks as if it's the same as it was last year in 2022, as what I was saying earlier. And this is what I've been saying. The surprise rate hike has had an outsized kind of effect on the market sentiment relative to the actual change in the interest rate, meaning how, honestly, minuscule of a 25 basis point it actually is. So if this was the straw that breaks the camel's back on the negative amortization, we could see a lot of listings come to market. Now, do keep in mind, the difference between now and last year when we're having this conversation regarding this is that we are now 1 year closer to the proverbial mortgage renewal crisis in 2025 and 2026. Would I personally be surprised if we see more sellers? No, I'm actually expecting it. How much we're going to get? Kind of hard to tell. I don't think it's going to be enough to blow up the market where we're going to crash prices. Now, while GTA will likely not get into a buyer's market, months of inventory being over 6, that's the definition, right? It definitely feels like one right now. It felt like one in 2022 when we were between 2 and 3 months of inventory as well. So I wouldn't be surprised if we get something close to that, right? Now, let me show you the pace of de-acceleration in June. Here's a chart showing you the month over month change as a percentage, right, in active listings, meaning the second derivative, if you guys want to get nerdy. So the red line is basically 0%, right, where it's, they're increasing and decreasing, and the orange is the historic average. You can see those two massive spikes, right? One is the pandemic, which we already know is going to permanently be ingrained into history as a massive outlier for everything statistically. And the other one is this year. So yeah, the amount of active listings increased from May to June is massive. It is so much stuff got left over and didn't sell. It's because we had very, very little sales, which is why it shot up. We're well above the historic average that we should be seeing. And we should actually be seeing a decrease in active listings going into the summer months when traditionally sellers aren't actually listing and most of the stuff got bought up at the end of spring market. Now, here's the sale and changes. Again, ignore the massive outlier that is the pandemic, right? I'll probably be saying this for the next decade. And you can see that the only time we got this few sales was in 2017, when effectively nobody was buying any freehold homes in the 905 region because of the foreign buyer tax that crashed the market in 2017. Now, here's the change in new listings in the same fashion. You can see we normally don't get new listings in this volume in June. Traditionally, it's like 10% decrease. This year was above the red line, the 0%. So when you combine all of the stuff I just showed you, where we have sales decreasing really fast, new listings coming onto market, and from my calls, more coming on, the new listings that are coming onto market are not selling. Therefore, we have a rapidly deaccelerating market, which means we may have some price discovery downwards in the coming months. Call it 30 to 90 days. Now, keep in mind, this is the second derivative in acceleration. It's not happening yet, but I'm seeing that trend right now. It's just not looking good, especially if we get that rate hike tomorrow, right? That's just going to add to the pain. Now, I'm not sugarcoating this for you, but I will end with a little bit of positivity for you in case everyone's freaking out, right? If you look historically where we are in June right now, the actual number of active listings, nominally speaking, we are still technically below the historic average of how many things we should have, right? So meaning we are still technically having not enough homes to sell relative to, the normal demand. Obviously, demand is probably much lower now because of the rate announcement tomorrow and the one that just happened in June. Now, sales, historically speaking, are below norm, which doesn't necessarily bode well, but our listing count right now, you can see over here, is historically kind of within range the last 20 years. So it's not like it's kind of totally out of whack. The previous charts I showed you was the deceleration and the acceleration, right? So it's a trend that in that direction really rapidly. So while these numbers I'm showing you right now don't necessarily paint a really bad picture of the market, it does when I showed you the second derivative, the acceleration or deceleration in which the direction the market is going, right? Because that's what's showing you the changes and how fast they are changing. Plus, it also likely means that there's a chance, price declines are coming up outside of the seasonal norm. Because right now, if you look at the headlines, it could probably and likely will say prices are up year over year and still paints a fairly rosy picture. Now, you can make numbers say whatever you want, and I've been saying this for a very long time, right? But I'm telling you, the deceleration in the market is happening right now, and it's why I said May 2023 is likely the peak for pricing. Look, this is not to say we're going to come to some extinction level event in the real estate market or anything, so don't freak out. I'm just letting you know the market effectively did a 180-degree turn and went backwards in the last month, and now is speeding up in the deceleration side just as fast as it sped up in the acceleration side in February and March. I hope this gives you a better understanding of what's happening in the market. This one I went really, really gritty and nerdy into the numbers and talking about acceleration, deceleration of the market. But it kind of jives with what I'm seeing on the ground when I combine the data and kind of what I'm seeing when I'm transacting every day. So if you are concerned about your unique situation, given the change in tempo of the real estate market and you don't know what to do, you can book a call to discuss with me about what to do in that situation. The link on the screen right here, it's www.chatwithzen.com, is the best way you could book a call with me. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?